So moving on for our next topic, we're going to hear from Claire White, who is an economist with USDA Risk Management Agency. Claire will be presenting about a controlled environment pilot crop insurance program, which was implemented in the 2024 crop year. So I met Claire a couple years ago at Cultivate, and they gave a talk, and there was only two of us that showed up, and I was like, wow, this really seems like this would be a valuable tool for those of us in the citrus nursery world, because we're in a controlled environment and we face, potential risk of quarantine that would cause us some real economic hardship. So glad you're here.
Thank you. Good to see you again, Aaron. Yeah. Thank you all for inviting me to come present to you. I'm Claire White. I'm an economist with the USDA Risk Management Agency. I have some colleagues here with me too. The Risk Management Agency is the crop insurance arm of USDA. We have a couple crop insurance programs that might fit your operations as nursery growers. The one I'm going to talk about today is the Controlled Environment Crop Insurance Program, but we also have one called the Nursery Value Select Crop Insurance Program. I will throw in some tidbits about that Nursery Value Select program as we go through here. So here's the agenda that I'm going to talk about today. What is the Risk Management Agency and how does it work in the crop insurance world? And then I'm going to go over a lot of different things with the Controlled Environment Program, like background and overview, benefits, who's eligible, what it covers, where it's available, how it compares and contrasts to the Nursery Value Select Program, and then its interaction with Farm Service Agency programs. So what is the Risk Management Agency? RMA serves America's agricultural producers through effective market-based risk management tools to strengthen the economic stability of agricultural producers in rural communities. It's a sister agency to FSA and NRCS, FSA being Farm Service Agency, and NRCS being Natural Resource Conservation Service. And we fall under the USDA's Farm Production and Conservation Mission Area. So RMA administers the Federal Crop Insurance Program, but we fall under the Federal Crop Insurance Corporation, which manages the Federal Crop Insurance Program. And then RMA has a public-private partnership with what we call approved insurance providers. And the approved insurance providers work with agents and producers to ensure that producers have the risk management tools that they need for their operations. So you as producers don't necessarily work directly with risk management agency. You would work with your agent and your insurance company to determine what tools you can use for your operation. We just basically tell the insurance providers how to service and sell the policies and then do the loss adjustment process. So now I'll get into the Controlled Environment Crop Insurance Program. The Controlled Environment Crop Insurance Program was a result of the 2018 Farm Bill. And the 2018 Farm Bill directed RMA to research the feasibility of a policy to ensure, in a controlled environment, the production of floriculture, nursery, bedding plants, the establishment of cuttings or tissue culture in a growing medium, or similar production as determined by the Secretary of Agriculture. The Farm Bill also directed RMA to study the effectiveness of policies based on the risk of plant diseases introduced from the environment, contaminated cuttings, seedlings, or tissue culture, or federal or state quarantine or destruction orders associated with the disease or contamination. I want to point out this last bullet here. It says quarantine or destruction orders. And right now, our crop insurance program only covers destruction orders. However, we are in the midst of revising the program to add in quarantines as well. Now, there will be some stipulations surrounding the quarantines, and it is subject to approval by our Federal Crop Insurance Corporation Board of Directors. That meeting actually is taking place this week. And so we will find out by the end of the week whether our proposed change to allow quarantine coverage can be implemented. So what we did is we took the language in the Farm Bill and we converted that to a crop insurance program. The Controlled Environment Program insures plants grown in controlled environments. It insures plant disease or contamination losses due to federal or state destruction orders. And those losses are compensated based on the value of those affected plants, and that value is based on producer's sales history. It's based on the framework of our NVS pilot program, and it's available in select states and counties. So what is a controlled environment? For the purposes of crop insurance, we consider a controlled environment a fully enclosed, permanent, non-seasonal structure where all elements needed to support plant growth are provided artificially. The benefits of this program include a simple application and policy renewal process. Your detailed inventory is not required with your application. It allows producers to select plant categories for coverage. And what I mean by that is we group plants within 10 plant categories, and you and your facility might grow, let's say you grow plants that fall under 7 plant categories. You do not need to insure all 7 plant categories. You can insure 1 or 2 or however many you would like to insure. As a producer, you can also select the amount of coverage. And this allows you to tailor your coverage based on your operation. If you have, let's say you have $2 million in inventory only 2 or 3 months out of the year, you don't want to insure that full inventory all year long. You can select an amount below that to cover throughout the year. And then you have an opportunity to increase that value a couple of times during the crop year if you need to. The prices for your plants are determined based on your sales history. As I mentioned before, disease and contamination are the only insured causes of loss. You may insure the same plant under the Controlled Environment Program and the Nursery Value Select Program. And finally, you're eligible for an indemnity if your loss is greater than 10% on a unit. And this bullet is emphasized because it needs special attention. In most of our other programs, your coverage level determines how much loss you have to incur before an indemnity is payable. So if you had selected a 65% coverage level, you must incur a 35% loss before an indemnity is payable. And this is the reason for this is typically as you increase your coverage level, the severity and frequency of your loss goes up. But with CE, that's not the case. If you are required to destroy your plants, it doesn't matter what your coverage level is. All your plants are destroyed. So it's either a 0% loss or 100% loss. So in this case, we just set this 10% limit where you have to incur a 10% loss before you are eligible for an indemnity. So if your coverage level is 65%, you're still not going to get paid more than what your coverage level is, but your loss starts at the 10%, at a 10% loss. Who is eligible? This item here is our big ticket eligibility requirement. You must be at least 40% wholesale, which means you have to sell your plants to wholesale clients, which include retailers who sell to end users, landscape contractors, government entities or organizations, or commercial fruit and vegetable producers. There are other eligibility requirements, like you need to have a catalog that you provide to your customers, and that catalog needs to be provided to your crop insurance agent. And there are other eligibility requirements, but this one here is the big ticket one. What does CE cover? It covers plant disease or contamination that have been destroyed under a destruction order. To be an insurable loss, the plant disease or contamination must have been unknowingly introduced into the operation at no fault of the operation, resulting in a destruction order that requires the destruction of plants. And producers must have appropriately executed a self-certified biosecurity plan. The destruction order must be in place and turned in for loss adjustment purposes. That destruction order must include the name of the disease or cause of contamination, the action to be taken, how to destroy the plants, date and deadlines for destruction, and the name of the plants that are to be destroyed. The plants affected by the destruction order are considered dead or zero market value. Buffer plants are also included in this. If buffer plants are not infected but are required to be destroyed, we will cover the destruction of those plants too. They're also considered dead, zero market value plants. There are two sets of program dates. One set is for producers who reside in states along the Gulf Coast, the East Coast, and in West Virginia, and then another set for all other states. The sales closing date is May 1st or September 1st, depending on your location. And then insurance begins on June 1 or October 1, assuming that you get all your necessary documents in by that sales closing date. Premium billing dates March 1st or July 15th, and insurance ends May 31st or September 30th. This is the pilot area. It's available in 119 counties in 25 states. The green counties have that May 1st sales closing date. The blue counties have September 1 sales closing date. As I mentioned earlier, we are going before the FCIC Board of Directors to amend the program to hopefully cover quarantines, but we are also asking for an expansion to additional states and counties. We are looking at possibly another 45 counties and I think 7 states. And this would be effective for the 26 crop year. So if you are here in California, this would be effective as of next September.
Can I ask a question?
Yes.
So if we don't see our county highlighted on that map, how would you go about trying to get your area in?
Email me. Or the other option is the Risk Management Agency has 10 regional offices across the country. You're here in California, right?
Correct, yep.
Your regional office is in Davis. So you can always reach out to your regional office and then they will relay the information to me back in Kansas City.
How do we get your email information? Because we're from Louisiana.
I think I have it on the last slide. I know one county in California we're looking at adding is Los Angeles County for this next year. So here are some similarities and differences between the two nursery programs we have available. We've got the controlled environment, which is what I've been talking about. We also have Nursery Value Select. Similarities include allowing producers to choose their selected value, and I kind of alluded to this earlier when I said that you could select the amount of coverage. We call that selected value under these programs. It allows producers to choose which plant categories and practices to insure. The application and loss adjustment processes are the same between the two programs, and the program dates are the same. Now the differences include controlled environment is available in select states and counties. NVS is available in every single county across the country. CE insures plants and plant products. So if you think about like citrus trees, it's the tree and the fruit. You do not necessarily have to sell the tree in order to be covered for the fruit. But under NVS, the requirement is the entire plant must be sold with the root system attached. Now, if you were to sell lemons or oranges or something off that tree, that does not have any bearing on coverage, but you must sell the entire plant in order for it to be eligible for coverage. Under CE, it covers disease and contamination resulting in a destruction order. NVS covers a wide variety of adverse weather conditions. It does not cover contamination. There are some, we do cover disease in certain circumstances under NVS. Under CE, an indemnity is triggered at a 10% loss. Under NVS, the indemnity is triggered based on your coverage level. You can have both policies. You can have a CE policy and an NVS policy. You can insure the same plant under both programs. The only caveat is you cannot be indemnified on that plant under both programs. And how do these two programs interact with FSA? FSA has a non-insured assistance program. You probably are familiar with this. We call it NAP. You can purchase coverage under NAP and CE and NVS programs. And that is because both CE and NVS are pilot programs. If we were to ever convert CE or NVS to a permanent or a regulatory program, then you would not be able to purchase NAP. There's one exception, and that is if you are in a county. Let me think about this for a second. Might not be an exception. Let me come back to that if I can think it through. If you have a loss on your plants, you are limited to indemnification under only one program, either NAP or RMA. I wonder what I was thinking about that CE thing. I don't know. And that concludes my presentation. This email address I have here is for my nursery team, but I get every single email that comes through this inbox. The website here too provides a lot more information on controlled environment. We have a fact sheet, frequently asked questions. There's a training presentation that you can watch. Also on our website, you can locate a local crop insurance agent if you all are looking at and purchasing the crop insurance policy. Are there any questions?
Pick me. Look at Claire. You go, girl.
Thanks, Nate.
All right, Claire, thank you very much. Valuable information. Appreciate you coming and sharing. I'm going to ask a bit of a tricky question, and I'm going to give you the caveat. If you don't know the answer, say you don't know, and nobody's going to be upset. Define a quarantine.
Well, that is a good question, Nate. The way we have it drafted in our policy is basically guidance from a state or federal agency that restricts, I can't remember everything that we say, but it might not be quarantine as you may be familiar with it, but what we are hoping to do is if you are prevented from moving your product or you're told you have to clean out your facility due to a breach, if the guidance gives you an option to destroy and you destroy it, it will be eligible for coverage. So that is the tricky thing here. It's not just guidance saying we're restricting the movement or forbidding you to move it wherever you typically move it. There has to be that extra step of you destroying it in response to the guidance in order to be covered under this program.
Follow up to that.
So Claire, in the case of, I'm going to use Florida because we've had this discussion. In the case of Florida, if under the current scenario, if a citrus nursery was issued a stop movement order or a removal of certification by USDA, let's use the right word here, removal of certification by USDA, but because the state of Florida is in complete quarantine for ACP, CG, and CC, we would still be allowed to move our plants in Florida. But if our primary market is not in Florida, we now have the scenario of USDA has removed a certification for where our primary customer is, but we're in contradiction because the state of Florida doesn't say that it has to be destroyed, that you can sell it somewhere else. And I know that's a gray area, and you and I have had this discussion, but I'm asking that purposely because as the quarantine option is discussed for approval, we need to be sure that we don't have contradictions between agencies or interpretation in the insurance program that says, well, they could still sell it in Florida, so now it's not, even though they chose the option of destroy, it's not coverable because they did have an alternative. Right. I know that's a lot of statement more than question, but that scenario I think is really an important distinction in that discussion.
No,
You're passing, you're helping.
I've done enough damage already.
Yes, and I know that that is a big hurdle that you all have in Florida. And APHIS and RMA have been working together on ways that we can help situations like that. So it's still in the works, but yes, we are seeing firsthand down in your facility a couple months ago. We understand there needs to be some guidance, some help for you all, and we are working on that.
Thank you, Claire. Good information. I have experienced a situation that I want to share with you that may help you in, especially with these approved insurance provider. Are there many or only one or two people?
I think there are.
I have follow-up.
Oh, go ahead.
I think we need to get the mic so that
No, I have follow-up. I didn't.
I'll bring him back.
Yeah.
Yeah, I think there are 7 or 8, 12 approved insurance providers, but within each insurance provider, there might be many companies working through that insurance provider to provide crop insurance. Mm-hmm.
Now I'll tell you that you may have to keep in mind, and for the rest of the people. I grow limes in Hidalgo County, Texas. And unfortunately, South Texas is 10 years behind in getting all the information because 3 years ago, our agents didn't know about the NAP policies. They said nobody has informed us. Yeah. So anyhow, I worked with the consultant in College Station, AgriLogic, to get the limes insurance program. So I took this, the last year, I took the 65%. It was very expensive. And I had about 25,000 trees died, 1-year-old trees. Unfortunately, it is all in a large contiguous area. This is the word you need to know. Yeah. The contiguous area, you guys make a note of that one. So I have 6-7-year-old trees, lime trees, and then other blocks, contiguous in blocks, which I planted. And I had the freeze, about 75% of the plants died. So the approved agent, my agent wants to see that I get paid, but the approved the API, is that a provider? Provider said, no, it doesn't trigger a loss. I said, how come? And I need only 35% loss to get that one. He said, contiguous property, and they put my 1-year-old tree, which is next to a 7-year-old tree, it is all one block. I said, nonsense. It doesn't work that way in my language. I'm a scientist. Unfortunately, left a university position to start a citrus business. Yeah. And I found out that 2 natural disasters is easy to absorb compared to act of government. So I contacted the state director. And he said, Manny, we will correct it next year. I said, no, I want this to be corrected this year. Yeah. So I said, I will write a letter to whoever wants to hear about it. And I believe they corrected it. So these providers have a lot of power to them. They can change things as they want. No.
We have to be the ones to change it. Okay. So maybe we did it in our office. So I assume you have the Texas citrus tree policy. Yes. Does that sound right? Yes. Okay. Yeah, and I think your issue has to do with what we call unit division. And everything in the county is a basic unit unless the crop provisions allow for further division. And the more you diversify the units, the higher the premium is. So if it's expensive now, if we were to further divide your units by age or block or something like that, then the cost is going to go up.
Put the 1-year-old and 7-year-old same unit.
Yeah.
I told them you cannot put a 40-year-old mother and a 1-year-old baby to be in the same freezing conditions and the baby damaged and you call it all between mother
Yeah.
and the baby, nothing happens.
Right, that makes sense. Yeah. Yeah. Yeah.
Georgios in the back. Excuse me.
Here is something that came up yesterday. If nurseries don't sell, for this example, which applies in many different cases, if nurseries don't sell trees, then there is no assessment for research projects. So yesterday we had to deal with a reduced availability of funds from the nursery, California Citrus Nursery Board. So less research will be funded because nurseries in the Los Angeles quarantine, for example, cannot sell citrus trees. Can you take this back to the powers in DC and see if there is an opportunity to recover through this program or other program side effects of a quarantine, like, for example, reduce research funds because there is no sale to collect the assessment?
So in California, we have a program. So for citrus nurseries, we assess ourselves on the first sale between 0.5% and 1.5%. And so that's what Georgios is talking about. So like it's all based on sales, right? So I think that is an interesting additional side effect, right? From nurseries getting caught up in a quarantine, loss of potential market, that it may even play into the ability of generating funds to fund research efforts. Yep. Nate, yep, okay.
I'll do a little more damage. So Claire, in the slide presentation, you made a statement about you would have to prove the disease or contamination. Is that correct?
You would need a destruction order that.
Here, Claire.
With the way the policy is in place right now, you would need a destruction order that says these plants were required to be destroyed, and this was the cause of the destruction order.
All right, so here, I'll ask you the question, you can repeat it. How many times in the history of the USDA have they issued a destruction order?
How many times have they ordered a destruction order? It's not that many. And I think that is part of one of the many reasons we're trying to add quarantine to this too. But the fact that there haven't been a lot of destruction orders means that the premium rate for this program is pretty low too. So it might seem expensive, but it's a 1% premium rate, which is probably one of the lowest that we have out there.
So I had one question. You mentioned in your slide that part of the program qualification is that you need to have a self-certified biosecurity plan. Would you talk about that?
So it's really something that shows the crop insurance agent that you are putting in the effort to prevent contaminations, diseases. You have the double entry, you have the foot wash, things like that. There's not a set protocol that you have to follow. We have an example in one of our handbooks that the companies will use and say, hey, this is an example of what we'd like to see when we come out and inspect your operation, to let us know that you don't have breaches in your facility, that you are trying to prevent the contaminations and the diseases from entering in.
Are you familiar with the SANC program? Yep.
I have heard of it. I know I have sat in on presentations, and I think Craig might be. I can't remember if it was from Craig or someone else with American Hort, but they gave a presentation on that, and I think that would be a good fit if you do follow the SANC protocol or program or whatever the correct term is, that would be a good biosecurity protocol fit for the program.
It's the systems approach to nursery certification. So we're going to hear a presentation from Craig this afternoon on that topic. So I'll just add this, when I first met Claire and we first talked about this program, she said controlled environment. And that was like indoor production, like no vents, no doors, no screen, right? And then we talked about this issue of destruction versus like if you get caught in a quarantine and you lose the market. So, I think government can move slow, but I am encouraged to see that there is some like thinking about trying to adapt the program to fit the reality of the needs of the industry.
And Aaron, you were the reason we allowed that flexibility for ventilation. So thank you for that. But whether our programs are pilot or permanent or regulatory, we are always looking at ways to improve it. And we don't know how we can improve it unless we hear from you all or we hear from crop insurance agents who work with you all. So reach out to us if you have suggestions. If there's something you don't like that it just isn't going to work, or you want to see something different, if you want it to be available in your county, and that goes really for any program. It doesn't necessarily have to be for these nursery programs. If you have a Texas citrus tree policy and you need help, reach out to us. Send me an email through this and we'll get it to the right people.
Claire, thank you so much.